Joining me now to talk more about the markets is Russell Hackmann. He's president of Hackmann Wealth Partners. Russell, welcome.
Thank you very much.
A little bit of chop this week. What do you make of it?
Well, it has been obviously an exciting year. A lot of gains that people are sitting on, not only for this year, but for the last 5 years. You look at the S&P up 100% over the last 5 years, and that gets, people are sitting on gains, and it gets them nervous when you start having these couple percent down days.
Yeah. And in terms of how we watch this volatility take shape, what's behind the recent bout? Of course, the government shutdown was in focus. Now it's reopened, and AI seems to be at least providing some caution in the market right now.
Yeah, there's a lot of speculation about where things are going to go with AI. You have OpenAI having made so much in the way of funding commitments that they don't really have the funding for. Some concern that some of this has gone too far too fast, right? And some people have made a lot of money in those technology names, and so concerned that you could see a pullback, maybe a significant pullback sometime. At the same time, you have a lot of uncertainty around the Fed. You were talking about kind of 50-50 on December cut. Inflation's staying around 3%. Personally, I'm concerned about 3% inflation, and maybe it could go higher.
Mm-hmm. What's your view on how the Fed should proceed come December?
Listen, I think the Fed has kind of changed its tune. Like a few months ago, they would have been saying, hey, we're way above 2% inflation. Now they seem comfortable with 3%. I think that's part of the politics at hand here. I think the Fed needs to be very diligent. There are, people really voicing, and, you can't help but just go to the grocery store yourself or go out shopping and see, like, hey, everything's costing more. Like, my healthcare went up 14% this year. Like, there's real inflation, and I think that's a danger out there, not only to the economy, but to the markets.
Yeah, and when we look at earnings, we know most of the companies have reported. Per usual, they're exceeding expectations, but the big report that we'll get, at least in the AI space, is NVIDIA, and that's a little over a week away. What are your expectations heading into that report?
Well, clearly, NVIDIA, I think, is probably selling everything they can possibly make, right? That's clear. The question is, and you have the big tech companies, the Metas, the Microsofts, the Amazon, basically building data centers, buying AI chips as fast as they can. I think the question is, at some point, do they start to say, hey, we need to pull back on some of this spending because, where are the actual returns for us? There's starting to be some bottlenecks in the energy space. And, it's like every party, even if long-term AI is going to be big for us, which I think it probably will be, there could be a lot of sorting out between the winners and the losers, and that is yet to come.
Mm-hmm. We'll wait to see how that actually plays out. What else is on your radar, Russell?
Well, we're thinking about, for our clients, a lot of whom are retired folks, is, hey, there's just been a lot of gains in the stock market. We like the idea of taking some chips off the table. The bond market we're a little concerned about because, again, persistent inflation. And so the question is, how do you get kind of steady, balanced growth over time? And it really has been a very long time since we've had a very big downturn, right? So what do you do to kind of control your risks? That's a lot of what we spend our time thinking about.
Russell Hackmann, president of Hackmann Wealth Partners, joining me in studio. Russell, thank you.
Thank you very much.
Yeah. All right, everyone.